The US dollar is softening. Central banks are signaling caution, and safe haven assets are holding firm. Today's price action is a noise, it's positioning. So let's break down what's driving momentum as we head into the weekend. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where I unpack the biggest movers across currencies, commodities, indices, and blending your fundamentals with your technicals each morning. And as at the end, also just adding a little bit of common sense, because, well, let's face it, markets don't always make sense. Let's kick things off today with currencies. Now, the British pound has been hovering around $1.31 for quite some time now, trimming earlier gains and staying close to a 7-month low. The Bank of England held its rate at 4% yesterday, but the votes were tight. 5 members wanted to hold, 4 were ready to cut. That's basically the monetary policy version of, we're not fighting, we're just having a passionate discussion. Key takeaways here is, well, the Bank of England is signaling that inflation risk has eased and weaker demand is starting to show. If disinflation continues, the path to rate cuts is, well, likely slow and gradual. And it's now more openly on the table. Looking at the charts, GBP USD is currently trading near 1.3119. Over the past month, it is down 2.1%, and over the past 12 months, it is still up 1.5%. So this area around 1.315 is a psychological pivot zone. A decisive break under 1.3 flat would raise concern for, well, further downside momentum. On the upside, a sustained push back above 1.315 would help restore bullish confidence. So the question here today is the pound simply resting or preparing for a bigger directional move? Well, we'll know once the market has digested more clarity on the Bank of England's easing policies. Moving over to commodities, gold is trading around $4,000 an ounce, a major psychological level. But why is this level so strong? First of all, job cuts in the US surged in October. The prolonged US government shutdown is introducing economic uncertainty, and markets are pricing in roughly a 67% chance of a Fed cut in December. When uncertainty rises and the Fed leans dovish, gold tends to look like that calm friend in the group chat. Looking at the charts, gold continues to hold above 3,975, which is also the 38% Fibonacci retracement level based on the last rally. And that is currently acting as the support zone. Key upside levels to watch is the $4,050 area as near-term resistance. A break above 4,050 opens the door towards 4,130. However, price is repeatedly testing this 4,000 level without strong follow-through, which is suggesting the market wants confirmation before committing to something higher. So again, now the question here states, does gold push beyond 4,050 before next week, or will we first see a healthy correction further down? The answer is likely going to come from the next wave of labor or inflation signals. Finishing things off for today with equities, the FTSE 100 pulled back just over 0.5% after hitting a fresh record high earlier this week. The Bank of England's decision created a mixed mood, and earnings added additional turbulence. Hikma Pharmaceuticals dropped sharply on supply chain concerns. Smith & Nephew and Diageo also showed notable declines. However, IMI and Auto Trader posted strong performance, helping cushion some of that downside. This is your classic rotation beneath the surface day. The index is down, but not all sectors are suffering. Looking at the charts, the FTSE sits around 9,715 points, modestly off its peak, which is currently sitting near 9,790. So over the past month, it's up 2.6%. Over the past year, it's up nearly 20%. This market is still on an upward structural trend, but stretched valuation plus earning sensitivity equals a market that may favor patience over impulsive momentum. So here we need to ask, is this a breather or the start of a broader pullback? Next week's guidance will update us to tell us more on this. And as we head into the weekend, markets will take a pause, but the narrative won't. The key story to watch into next week is how policymakers balance slow labor conditions with the need to maintain economic stability. So keep an eye on how rate cut expectations evolve, particularly in the US and the UK, because those shifts will likely be the dominant driver across currencies, commodities, equities, indices, and you name it, as well. Markets reopen on Monday. And with that, we come to the end of your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.